Welcome to Smart Stock Watch. Today is August 19th, 2025, and we're diving into LZB's fiscal 2026 first quarter earnings report. LZB, a leader in the retail and manufacture of residential furniture, has just released their latest financial results. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. LZB's report is quite interesting, especially with the dynamics in their retail and wholesale segments. I'm excited to break it down for our viewers.
Revenue and profitability overview. Let's start with the top line. LZB reported sales of $492 million for the first quarter of fiscal 2026, which is a slight decrease of 1% compared to last year. John, can you elaborate on this?
Absolutely. The decline in sales is primarily due to lower delivered sales in their Joybird and international wholesale businesses. However, the retail and wholesale segments showed growth, with retail written sales up by 5% and wholesale delivered sales increasing by 1%. Despite the sales dip, LZB managed to generate $36 million in operating cash flow, which is a positive sign of their operational efficiency.
And what about their profitability?
LZB's adjusted operating margin was 4.8%, slightly down from last year. The adjusted EPS came in at 47 cents, which is below the forecasted 53 cents. This reflects some margin pressure due to investments in new stores and a challenging consumer environment.
Segment performance and strategic initiatives. John, let's delve into the segment performance. How did the retail and wholesale segments fare this quarter?
The retail segment saw a 5% increase in written sales, driven by new and acquired stores, although same-store sales were down 4% due to lower traffic. The wholesale segment experienced a 1% sales increase, with a notable margin expansion to 7.5% on an adjusted basis. This was largely due to lower warranty and marketing expenses and improved sourcing.
LZB also announced a significant acquisition. Can you tell us more about that?
Yes, they announced the acquisition of a 15-store network in the Southeast region, expected to close in late October. This move is part of their Century Vision strategy to expand their retail footprint and brand reach, positioning them for future growth.
CEO insights and future outlook. What insights did CEO Melinda D. Whittington provide in the report?
Melinda highlighted the growth in their core North America wholesale business and the strategic acquisition to bolster their retail segment. She also mentioned the launch of a new brand identity, which aims to rejuvenate the brand and drive future growth. Looking ahead, LZB expects second quarter sales to range between $510 and $530 million, with an adjusted operating margin of 4.5% to 6.0%.
It seems like LZB is balancing optimism with caution. How do you see this playing out?
Indeed, while they are optimistic about long-term industry fundamentals, they are also pragmatic about current consumer demand challenges. Their strategic investments and strong balance sheet should help them navigate these headwinds effectively.
EPS forecast and analyst expectations. John, let's discuss the EPS forecast. Analysts were expecting an EPS of 53 cents, but LZB reported an adjusted EPS of 47 cents. What does this tell us?
This indicates a miss of 0.06 cents against the forecast. The miss can be attributed to the challenging consumer environment and the investments in new stores, which impacted their margins. With only one analyst providing the forecast, the expectations might not have fully captured the market dynamics LZB is facing.
How should investors interpret this miss?
While the EPS miss is a concern, investors should also consider the company's strategic initiatives and long-term growth potential. The focus on expanding their retail footprint and improving operational efficiencies could yield positive results in the future.
Key takeaways. As we wrap up, LZB's first quarter performance shows a mixed bag of results. While they face some challenges, their strategic initiatives and strong cash flow generation are promising. John, any final thoughts?
LZB is navigating a tough market, but their focus on strategic growth and operational efficiency is commendable. Investors should keep an eye on their upcoming store acquisitions and how they manage consumer demand fluctuations.
Thank you, John, for your insights, and thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on LZB's performance in the comments below. Until next time,